Hello, everybody. Hope everybody's doing well. Quick market update. Let me reduce this and get to this. Okay, so here's what I wanted to show you here. So a couple things. Not getting in the market anymore as of right now, but just a heads up when I do tiptoe back into the market or continuing the tiptoeing back in the market, it'll probably be more geared to small cap domestic stocks. Because the US dollar is so strong, that usually is a headwind for big companies because big companies usually are overseas, right? And the strong dollar cuts their earnings. So small companies tend to do better in a high dollar environment. And also small stocks tend to come out of recession quicker, better. So I'll probably be overweighting in small cap when I do tiptoe back in. But I don't know when that's going to be just yet. But here are just kind of some thoughts that I have. So here is a chart of the S&P 500. A couple things to note here, which I found interesting. Where I've got circles is where the Fed raised rates. Okay, so it seems like to me that the market is digesting these rates just fine. We've been kind of flat, right? I mean, obviously up and down, but we're hovering around right here, about 4,000 S&Ps where we've been hovering around. And it seems like, the market's digesting it just fine. A couple of things to note here. It's interesting. The S&P 500 bounced off the 200-day moving average. And here's another trend line that I drew in that kind of tells me that if it goes past this line right here, so that would be, what would that be here? That would be S&P, again, 4,000 again. If it gets past that 4,000, that's probably a really, really good sign. So we'll see. As of right now, we just don't know. So again, when I tiptoe back in, I'm just kind of giving you my heads up on that. I do want to tiptoe, or not so much tiptoe, because I never am fully in on energy anyways. Usually only about 5% of the portfolio overweighted a little bit there. So my indicators just went off that says energy, it's time to get back into energy if it closes today at or above 88.91. So it was there earlier today, but it's calmed down now. So if it closes above 88.91, I'm going to look to get into that next week. Again, just probably a smaller portion, 5% of your portfolio of the cash that's in there, okay? I wanted to also show you how strong the US dollar is. This top chart is the US dollar, and this is gold on the bottom. So you can see why I got everybody out of gold, right? For obvious reasons, it acts opposite of the US dollar. But you can start to see too that it's starting to level off a little bit. And as gold is leveling off a little bit. So we'll see where that goes. If the US dollar starts to go down, then maybe it might be time to get into gold. What's interesting is this is the 200-day moving average of the US dollar. So when the US dollar comes down to that point where it reaches the 200-day moving average, that's a good time to get in, usually into emerging markets and maybe overseas, but we'll see how that goes. I think that's it. Please use the link somewhere on this email if you'd like to jump on a phone call with me or Zoom or come into the office. But that's the update as of right now. Thanks, everybody.